Nau mai, hoki mai, and welcome back to Breakfast. It is 19 past 6. We wanted to answer some of the questions many New Zealanders have about KiwiSaver. And today we wanted to understand how money markets, both locally and offshore, can impact your KiwiSaver account. This next segment is brought to you by Fisher Funds. So here to discuss is Chief Investment Officer Ashley Gardyne. Morena, Ashley.
Morena.
Let's talk about New Zealand's share markets. And you know, we know it's volatile, but how can, in terms of our KiwiSaver, how does it impact our KiwiSaver?
Yeah, it's a really good question, and sometimes the New Zealand market doesn't have quite as much impact as you might expect. Global share markets over the last 3 months, 12 months, 18 months have actually been really strong, while the New Zealand market's been a bit weaker. And that is for obvious reasons, that the New Zealand economy has been weaker. Whereas the US economy has been really quite strong. The housing market there's been strong, employment's been strong, consumer spending's been really solid. So the US market's been doing a lot of heavy lifting and lifting global markets. So if the average KiwiSaver investor was to look at their balance, if they're in a growth fund, for example, they're probably up about 7% over the first quarter and about 15% over the last year. So that's despite what's happened in the domestic economy. And I think it's a really quite good reminder to remember that your KiwiSaver scheme is probably quite well diversified. It's not just invested in New Zealand. Yep. So what you're feeling about the New Zealand economy isn't necessarily reflected in your balance.
So in terms of managing it then, because we do know how volatile the share market is, in terms of managing your KiwiSaver, you know, how do we do that?
Yeah, well, you have an investment manager that manages the volatility for you on a day-to-day basis, tries to make sure they're diversified across different countries, different sectors. So if you're invested in KiwiSaver, you're likely to have exposure to 10 or so different countries, companies like Amazon and Google in the US. So there's a lot of diversity there. I think also picking the right fund becomes really, really important. So if you're more conservative, if you're closer to retirement, if you don't like volatility, then you want to be in a more conservative fund, and your advisor can take you through that. Whereas if you're earlier on your journey, you can probably afford to take a bit more risk.
Everybody's talking about inflation at the moment. We know that it is, well, it has eased, but it's still nowhere near that target range between 1 and 3, right? Percent. So in terms of that, how does that impact? How does inflation impact your KiwiSaver?
Yeah, so the way that inflation tends to impact KiwiSaver is actually more through its impact on interest rates. So if you think 2 years ago when inflation was spiking, central banks around the world were a bit behind the curve. They had to react quite quickly. They all hiked interest rates at the same time to try and get on top of inflation, which was really important to do. But the impact of those higher rates in terms of higher mortgage costs have a real impact on consumers, therefore businesses. And that's why we saw in 2022 share markets come off quite significantly. But thankfully, as you point to, inflation has started to come down pretty significantly now. We've seen it in the US, we've seen it in Europe, we're starting to see it here, and central banks are generally starting to talk about reducing interest rates at some point this year.
I know you've talked slightly to this, but as an investment, my KiwiSaver, it can be quite volatile. So, how much should we be concerned about that?
Yeah, I think volatility is a really important question, and it does come down to time frame. And I think the key thing about KiwiSaver is most people are in there for the next 5, 10, 20, maybe 30 years. And I think reflecting back on the last 5 or 10 years is really quite important. We've had COVID, we've had global lockdowns, we had the US-China trade war, we had Brexit, we've had a war break out in Ukraine. All of those events have been quite troublesome. They've caused terrible news headlines. They've caused short-term market reactions. But over the last 5 years, global share markets are still up 70%, and over the last 10 years, they've doubled. So the key thing is over longer time periods, those ups and downs tend to smooth out.
Ashley, thank you so much
for
your time this morning. Ashley Gardyne, Fisher Funds Chief Investment Officer. Tēnā koe.
Great, thank you.
Tony Mai will be right back after.